Hi everybody, my name is Anastasia Dvorak. I'm the Calgary Lifestyle Guide. Welcome back to my channel. I'm a local real estate agent and a blogger, and today we're talking about 8 things you need to know before you buy your first home in Calgary. Before you start looking at houses on realty.ca, we need to cover the following 8 concepts that will help you buy the house that you will love and will be able to comfortably afford. And stay till the end, because at the end I will be sharing a lot of time saver tips that will help you buy the best house that works for your family. So why should you watch this video? Buying your first home is one of the most important purchases you'll ever make, and I want you guys to save time and money. So let's get started. Number 1, permanent steady employment, permanent part-time steady employment, or permanent self-employment income that is steady. Basically, all you have to remember is that permanent and steady. That's what the lenders want to see. Typically, a lender will prefer that you have a permanent full-time position where you've been working for at least 6 months. The lender will ask you for a letter confirming the length of your employment, your salary, and the type of employment. One tip for you guys, please do not make any large purchases when you're applying for a mortgage. Do not buy a car, please. And do not switch jobs. Okay, that can definitely kill your chances, and buying a brand new car will affect your credit rating, so don't do that. If you want to switch jobs, wait until a possession date, because the lender can, or the bank can call your employer and ask if you're still working there, and if you're not, they might not give you the mortgage. So please change jobs after the possession date. Mortgage providers do not like risk, so they would prefer that you have permanent full-time employment and that you're able to make regular payments. If you've been working for the employer for a long time, that will definitely help you out. And also, if your employer is a well-known company in Calgary, that will also definitely help. Stable long-term employment generally helps, but the lenders typically look at other things too. You can get a bigger mortgage if you're applying with your partner or your husband or wife or family members, and you guys all have stable jobs. The type of employment you have will definitely affect your mortgage rate. It definitely makes more sense to get more stable employment, because that way you will get a better rate, and in the end it will save you a lot of money. As a part-time employee, you have to show that you also have stable income, and you will have to provide your T4s and information about your employer. You will also need to get a letter from the employer highlighting your hours, how many hours you work, your pay rate, and how long you've been working for at this company. Sometimes mortgage lenders are very cautious about part-time employees, so they may qualify you only based on a portion of your salary or potentially an average income for the last 2 years. So that definitely depends on the lender. Well, now let's talk about self-employment. You will be asked to provide 2 to 3 years of self-employment income. Generally, the lender wants to make sure that you're able to make the mortgage payments. So it's important to show the consistency in your income, or to show growth of your income, show that your company is growing. You will need to provide all the notices of assessments, all the T4s, all the statements, and additional information about your expenses and your revenue. It's best to work with a mortgage broker or a bank that knows how to handle self-employment individuals. It's also important to make sure that you don't have any tax problems in your corporation. Make sure that you pay all your taxes, everything's paid off, GST is paid, there's no taxes due, because that can definitely affect the ability to get a mortgage. Let's talk about unemployed. If you're unemployed, can you get a mortgage? It would be very, very difficult to get a mortgage if you're unemployed, even if you have a large down payment, because you will need to provide information that you have enough funds to pay the mortgage in full. Plus, you have to have enough money for 2 to 3 years after that. So that's 2 to 3 years of living expenses. You need to show that you have a reliable stream of income coming from another source. It can be income that's coming from your investment properties, disability payments, royalties, child support payments, and other possible payments that you may have. In this situation, I would recommend that you talk to a mortgage broker, because they typically can handle more risk, and they can find you a lender that can help you in your situation. Thank you guys so much for watching. Please leave me a comment if you have any questions. Subscribe to my channel, follow me on Instagram, and feel free to reach out to me. I am very friendly. I will reply to you. Please, I ideally prefer if you would send me a text message or an email, or leave me a comment, and I will be in touch with you as soon as possible. Thank you guys so much for watching, and I'll see you next time.